Wellcats. If you're not familiar with Wellcats, it is your Texas State Employee Wellness Program. Here's a brief list of our services that are free to all benefits eligible employees. Obviously, the wellness education series that you're here for today. We also offer group exercise classes, proactive nutrition or pan cooking classes, stretch breaks that also stream right here on Microsoft Teams, one-on-one nutrition consultations, and health behavior change coaching. So if you have any questions about any of these services or anything else wellness related here at Texas State, you are of course always welcome to reach out to us here at Wellcats. Our presentation today is building financial resilience. So you'll be hearing about strategies to help you prepare, including budgeting, goal setting, emergency savings, insurance, and so forth. This is presented by University Federal Credit Union. So I'm going to turn it over to our fantastic presenter, Joshua Edwards. Thank you so much for being here today and providing this information for our faculty and staff.
Absolutely. I truly appreciate it. And just first and foremost, it's some housekeeping. One, I know it's very difficult to ask questions. I love to make this as interactive as possible. So I can't look at the chat, but if there's any questions, comments, concerns, or thoughts, please just let me know. Raise your hand or what have you. I'm going to go ahead and share my screen real quick. And just one more thing. We are actually right here on campus during NSO. So you may hear our lively bunch out here at LBJ. It's lunchtime right now, so I apologize for that. But just want to make sure that you understood that we're having a good time out here. So we just want to make sure that that's out. So real quick, Josh Edwards, I am the Business Development Manager for UFCU. UFCU is University Federal Credit Union. We are the official credit union here on campus. Can everybody see my screen? Can a thumbs up or a yes, maybe? Yep. Okay. Gotcha. Thank you very much. Okay. So what is UFCU? So UFCU, we are the official credit union here on campus. The biggest thing that we want to talk about is the difference between a credit union and a bank. So those of you that have been here for some time know that there used to be a red bank that was here, and we've moved them along the way. We were lucky enough to join as the official credit union last year, I believe. We put up a great new sign in the stadium and just been having a great time working with the faculty, the staff, the students, obviously, providing the information about credit unions. So credit unions are member-owned. So what does that mean? So member-owned is if you have an account with a credit union, you own a share of that credit union. So instead of paying to shareholders, where most larger banks, like your blue bank, your red bank, who pay to shareholders, we pay back to our members. We pay it back to our members in terms of lower interest rates, little to no fees when it comes to account settings. And the biggest thing for us, though, is that we're local, quote unquote. I like to say that we're quote unquote local because we are expanding. We're here obviously in San Marcos. We will always be in Austin proper, but we're now moving into the Houston market. We've already been in Galveston. So we're trying to spread the word of UFCU, what we do and what we provide in terms of advice and guidance when it comes to anything financial matters. We're a not-for-profit, again, meaning that we're not paying to shareholders. We're paying back to our members, and we're a service mission. This is near and dear to me. I've been in the banking industry for going on 20 years. At the bank side of things, but getting into a credit union, it's really let me flourish when it comes to these types of settings, where I can bring the education behind the products and services that you now use or what you will use, especially when it comes to the students or the family members that are here that will be getting involved in these financial dealings when it comes to accounts, auto loans, investment conversations, these types of things. We are a full service location right here at LBJ. So the location that we have here at campus is a full service campus where we can take care of everything from just general conversations, one-on-one consultations to long-term investment planning if needed. So we're very excited to be here, but it's always about people helping people, right? And the biggest thing is to make sure that we get out this information. And this information, we want to make sure that we want to make it lively, right? So again, I know in a virtual setting, it's a little bit harder to have, feedback, but when I'm doing these in person, I always like to ask questions. I always like to see where you may be in your picture or your financial picture. and just try to get some, some conversation going instead of just me talking for for the time being. So, the last thing is credit. So I'll tell you that I know that it's built in our name, Federal Credit Union, right? We don't just do credit. That's a misnomer. A lot of people think that we're just here of dealings with credit. But I will tell you that that's one thing that we love to talk about because it is so impactful. Me personally, I think it's the most impactful part of a financial conversation when it comes to talking about credit, pulling back the veil and making sure that everybody knows that, it shouldn't be awkward to have these conversations. We want to have these conversations out there and at least have these kind of conversations to where it's, let's plant a seed about something that you may want to talk about later. If it's not in a group setting, at least in a personal setting. And it doesn't have to be with the credit union. You don't have to be a member with a credit union to come in for these talks. This is at full service to you. And at the very end of our slides, there's a QR code for anyone that would want to just set up a consultation, just to have a talk. Again, and all of this information you can take to your financial provider, whoever that may be, as long as we're bringing the information out and getting it to their next logical step. So, a quick agenda for today. We're going to talk about, where are you starting from, right? Understanding some money values, just baseline things, creating a budget if you don't already have a budget. Where do you want to go? Smart goals, rather. Saving with a purpose is something I love. And then we'll end on what to do to get there, right? So setting some smart goals and saving with a purpose, a little conversation about credit as well. So where are you starting from? So this is the biggest thing. So I always like to talk about me personally whenever I'm having these conversations. I started banking back when I was 16, right? I got my first job when I was 16. I was working at Roadhouse. I was a bus boy back then. But 99% of the folks or 95% of the folks that we know of normally get all of their background financial dealings from their parental units, whomever that may be, mom, dad, grandparents, whomever, family and friends a little bit, and then that's how they look at finance, right? So I personally am from a military family. My dad was in the military. My entire family has been in the military. And so I learned finance from him. And if those of you that have a family in the military or know people in the military, they're very direct when it comes to finance. My dad's rule was always cash, check, or you don't get it. There was never dealings with credit. There was never conversations about credit because that's how you got in trouble. And I saw that from my mom. It's an open and honest story. She got in a lot of trouble with credit, and obviously that put a lot of financial strain, right, on families, especially our family. So credit was always kind of a bad word when it came to us. But working through high school, obviously through college, I graduated college. I moved down here to San Marcos for my then wife to come here to get her social work degree, or master's in social work. We moved to Wonderworld Drive, Steeplechase Inn, or Stagecoach Inn, rather. I think they're still here. I believe they're still here. Walked in, applied for an apartment. I had just started a new job, really excited, getting a new place to go, and immediately declined. Immediately declined because I had no idea that you had to have credit to get an apartment. I had the money, I had the job, I had everything, and nowhere to live. So it was a little stressful, right? So where you're starting from, we're all starting at different stages in our life, wherever that may be. I like to bring that story up just to show where I started from. And so what we want to do then is just take that and just kind of break that down a little bit further, right? So to money values, right? From here, it's really just me asking y'all, or just thinking about what you currently think of yourself as a spender or a saver, right? So spenders, what's a spender? A spender is money in, money out, right? We're not worried about 2 weeks from now, we're worried about what's going on right now, what I can buy, what I can go enjoy in life, and just have money in and just let it go. We're not really worried about savings. The other side of that is savers. That's the exact opposite. Those are the ones that money in and I have to hold it. I have to look at my bank account before I go to sleep at night to make sure that I'm comfortable where I'm at, right? And what we want to do is just define those two to figure out where you're at, where you might be, and really just find a way to get you to that happy medium, right? That happy middle. Be a spender. Go out and have fun. We're only on this planet for a certain period of time. We want to make sure that we go out and have fun. Go out to the square. Go out to ACL or wherever it is that you want to go have fun with, right? But at the same time, make sure that we keep savings in mind because life is still long. in that matter. So we want to make sure that we're prepping for the future when it comes to emergency savings and just prepping for what will come, because it's not if it comes, it's when it comes. We will get into situations where we're going to need, and you may already be in situations where we need to prep or be prepared for, those matters that will come up. And just what we want to do is just kind of bring that in the forefront and just make sure that we're prepped for that and ready to go. So that gets into creating a budget. So creating a budget, again, we're not trying to talk down to anyone, but those of you that are on the call, do you have a budget, right? And we're talking about a living, breathing document. This is something that you have at your disposal that you can pull up on your phone. Pull up me. I personally use Excel. I am not a fan of Excel. I'll be the first to tell you. I don't know all the ats and some ofs and all this, that, and the other. I still have to Google it to this day. But it's just something for me to easily break down and code and categorize. And that's the biggest thing, right? We want to make sure that we're looking at what we're spending on. To look at our tracking our spending habits through any of our spending accounts. Some of us may be through just a debit card. Some of us may use our spending when it comes to credit cards, right? So it's really just looking at your breakdown of your spending habits. And the easiest way to do that is to get the last 3 months statements of whatever account you're using to spend, pull the last 3 months of statements, and that'll give you a great vision or idea of money in, money out, right? Because that's the biggest thing about creating a budget, finding your money in, looking at your money out, and finding patterns of that spending, right? And then the last thing is to break down the needs and the wants. So that's pretty much what we'll get to next time. The only thing that I don't like on this slide is miscellaneous. I would be very cautious when it comes to marking things as miscellaneous, because we all know that sometimes we'll be like, that was just a miscellaneous cost. I'm not really going to put it on my budget. But at the end of the day, if that miscellaneous, quote unquote, continues to pop up, we want to make sure that we start categorizing that into possibly a need or a want, right? So this is just to give you an idea of what just an example of what a budget may look like broken down. So say you got into your statements, right? You started pulling out these transactions. I mean, this is why I use Excel, because I could just copy paste onto an Excel sheet the items in and out of my account. But this gives you a little breakdown, right, of how we want to kind of look at it. You got groceries. Obviously, that's a need, right? But ramen, we know that that's food. That's a need, obviously, but is eating out all the time a need or a want? So we would probably list that as a want. We don't need to eat out all the time. But again, we're going to have fun. We're going to go out and have life, right? Enjoy life. We just want to make sure that we're looking at that and we continue to see, the ramen shop pop up every day, or Starbucks popping up every day. That's where we kind of want to start looking at our budget at, okay, well, why, where's our money going to? Where's our money coming from? Going. So when you're looking at your budget after you've broken everything down, right, that's where we kind of want to again go back to see where we might be overspending, right? If we're going to Starbucks, me personally, I buy Monsters. That's kind of my Achilles heel when it comes to my finances every day. I'm always stopping at the gas station to get gas, and I will always walk in to get Monsters, right? So just looking at that, just trying to figure out where we're spending and how to kind of adapt and adjust our bills as needed. So when you're adjusting your bills, this is again a kind of a breakdown of after we've created our budget, after we've looked at our needs and our wants, where we're spending, how we're spending, and just figuring out, okay, well, look, if I'm saving $95 at the end of the month, and I know I want to save a little bit more, or I can save a little bit more, what does that look like, right? The one thing I love to highlight here is the cable, right? Cable or Hulu. We all have streaming services more than likely. My wife is public enemy number one here. She has every single streaming service known to man. But they recently came out with bundles, right? Bundles helps you save a little bit of money with those streaming services that you may still be interested in if you do utilize them. My wife refuses to do bundles, though. She loves to see those individual payments come out of her account. Because that's just what she's used to, and she's used to seeing those. But if we get into a bundle package, we can reduce cost on that end, right? Again, going back to the money, the meal plan, or eating out. A lot of us may be Door Dashers, right? That's a big one. We spend money on DoorDash, where that $10 burger turns into $25 real quick. And if we do that, expand it out over a week, right, or 2 weeks, or what have you, that's a lot of money being spent outside of just simply going to get the burger, or maybe bringing our lunch, like at least once or twice in a week, right? So where we start saving money, and you can see at the little breakdown here, you get that 250 or 295 instead of the 95, and that's just a little way of we can adjust a little bit to start saving some money. And again, it does not have to be extreme. What we want to do is just start the process of looking at a budget, adjusting as needed, and finding ways to just save a little bit more. Save a little bit more to get to a savings account. Save a little bit more to get to a goal, right? And that's kind of what we're going to step into next. Where do you want to go? So the biggest thing for me is money goals. Whenever you have a budget, we want to look at a goal. Every time you have look at a budget, you should plan a goal. Me personally, when I first started again, when I was ran into the credit issue, my very first goal was to get a secured credit card. I needed to get involved with credit. I could not get a unsecured card. I had no credit whatsoever. I couldn't get a gas card. It was ridiculous. But I set up a goal. So my goal was to get a secured credit card. So what I did was specifically, list that secured credit card. I measured it. I made sure it was measurable. I tracked my progress. I said I wanted to get it within 9 months, and I broke down the payments where I get into attainable. I broke that down those payments to figure out how much I needed to save and where could I save to make sure it was also realistic, right? Because the one thing that you don't want to do with a goal is to set up something that is so extreme that it puts more financial stress on you, right? Going to buy a car, right? That's probably not something you want to put it as a goal for like a 12-month or a 9-month goal. Now, obviously, that could be a 2-year, a 3-year goal, right? Or buying a house could be a 5-year goal. Obviously, long-term goals, those take longer to obtain, but at the same time, they can still be realistic. But me, I was like, okay, well, I can save $500 for a secured credit card. So that was realistic to me, and it did not put a lot of financial stress on me to where it was unattainable, and then also it hurt me at the long run. Where if I missed my goal, that adds a lot. That financial stress can add mental stress, right? It can add physical stress to us, and that's why we just kind of want to break it down into these goals here. So another one of those goals should be saving with a purpose. We should all have some type of savings account. So we want to make now. I do want to stress though, when I see the goal dollar amounts down here, those are goals that you want to adjust those to you, right? So what is feasible for you, or what is a goal that you want to make for a emergency account or a saving with a purpose account, right? So for me personally, I know that I have my savings account, my emergency account there prepped and ready. So my next goal is vacation accounts. There's one thing about me. I will always go on vacations no matter what every year, because again, we only live on this earth for a short period of time, and I want to make sure that I experience as much as I can. So I make sure that that's always a goal for me. But we're going to have life events, right? Marriage, we're going to have job issues if that ever comes to if that ever becomes an issue. Car maintenance is a big one on here, right? So what I talk about everybody here is, how much does a car tire cost nowadays? We all drive more than likely, and if that tire blows, that's that's not that's not a cheap expense, right? Those tires are what, $200-300 now. And then if you've ever walked into a dealership or to a car like a tire shop, you're not walking out with one tire. You're going to look at possibly getting 4 tires. So expanding out that $300 to $1,200 real quick, right? That turns into a situation, because I don't want to spend $1,200 out of my pocket when I've already kind of planned for other expenses coming up. So that's when I'd have to look at other opportunities, other options, like getting some type of credit account or something like that to help me not only stay constant or consistent with my savings account, but then prepare myself for the tires that I know I need. It's not a want, because I don't know about you, but I'm not walking anywhere in Austin, right? Or I'm not walking anywhere from San Marcos to Kyle, where I currently live. So saving with a purpose is big. So how did we get here, right? So the biggest thing for me, especially when it comes to these types of savings accounts, what I'm talking about, these emergency accounts, these vacations accounts, this is where we like to talk about the bucket system. So I absolutely love the bucket system. So for me personally, if you just want to think about this in a broad sense, this is having a checking account with a bunch of savings accounts. Think of those savings accounts as buckets. Saving accounts are completely free. It does not cost anything. And if they do, come talk to me. But savings accounts are completely free. So what I do is I have buckets, quote unquote, but I have savings accounts for every bucket that I'm looking for. So if I have a savings account for vacation, I have a savings account for emergency, I have a savings account for my son, and I have a savings account for just random things that I personally want. Like if I want to If I want a new video game or something like that, I have a bucket for that. And we're not talking about, again, an exorbitant amount of money, right? We're talking about looking at our budget, finding ways to save $5 here, finding ways to save $10 here, and looking at our buckets and finding what bucket is the most important, which obviously may be emergency first. And then once that's filled, or once you've reached that goal, then you can waterfall down. You can start filling your vacation bucket. You can start filling your emergency tire bucket, whatever that may be. But this is just a great way to visualize what I'm talking about. Just having an account, having savings accounts with those, and just learning how to transfer funds to and from, right? So when you do that, a great way to start doing that, if you, I do it personally just because I like to see. I'm very diligent when it comes to moving money here and there. But you can also use small auto debits or auto drafts from your account. Those are pretty standard across the banking industry. Just make sure the money is there because that money will draft if it's not there. But moving money from a primary account automatically to a savings account. $25, or again, looking at your budget, what makes sense to move, and if you can move it, and then just start drafting those from there to where it's automatic, right? It's paying yourself first. That's what we're trying to get across. So, uh, next one is just saving outside of your savings, right? So taking advantage of the things that are here, that are available to you, especially at campus, or in any kind of career setting. You can take this information to whomever, but taking advantage of retirement plans. I know that's a huge thing. A lot of industries offer match programs. A lot of industries are tax deferred when it comes to your retirement planning. No matter what your age or where you're at in your financial picture, start planning, start taking advantage of what's there, what's being offered, and making sure that we're starting to have that focus, right? So I know if I'm talking to a student that's 17, 18, this might be the furthest from their mind, but if at least I can bring it up into conversation and say, hey, this is still important. No matter what, start thinking about what's available to you, no matter what kind of job you're in, and start planning for, or at least have a conversation. We'll touch into investing here in a minute, but have a conversation. Think about where you're going. Think about your next stages of life, where you're currently at, because you don't want to be in that stage of planning or preparing for when you're 5 years away from retirement. That's not the time to start planning. We want to start planning as soon as possible. And taking care of health, right? That's the biggest thing. Obviously, we're here for financial health, financial wellness, wellness across the board for Wellcats, right? But taking care of health accounts, health retirement plans, or at least at minimum health savings accounts, right? These are tax deductible. They're tax-free money when it comes to healthcare costs. It's very easy, very accessible, if offered, and then obviously the health plans outside of that for those of you with families and whatnot, start taking care of. So. Then we're going to ease into a smart investing. We do have a presentation that's fully on investing, if this is of interest. But the only thing I will bring up here, just because I'm not fully licensed, so I don't want to say anything outside of what we should be saying. But the one thing I want to bring up here when it comes to investing in any way, shape, or form is know the fees involved and know what you're getting into. Have a conversation with a licensed financial advisor. They should be free. Those consultations with whatever financial industry or company you're working with. They are absolutely free here at UFCU, but we just want to make sure that we're not getting involved in some type of account, some type of trading opportunity, whatever that may be, right? Just know the cost involved, and that may be cost up front, and that may be cost afterwards, right? So accessing 401ks outside of retirement, that may come with a cost, more than likely. So we just want to make sure that that's upfront. We want to make sure that we know what we're getting into, have a conversation, and just make sure that we're planning accordingly before we start looking at an investment opportunity, whatever that may be. My biggest thing is always going to be credit. So I will talk to y'all for hours on this. Obviously, we only have the time allotted. But for me, it's always about credit, right? So I've given my story about me being involved with credit. My son right now, he's 11. He's had credit since he was 6. I've started working on his credit and getting him prepared for that next stage in life. What we want to talk about here is if you haven't started working on your credit, please do so. or at least have a conversation with your provider or us here on campus. It's never too early, but it is too late if you need it, or if you need to use it and need it right away and you haven't started working on it. I don't know about you, but I have to qualify for a lot of things when it comes to credit. I don't have the money for a brand new car right now. I don't have the money for a house, especially in this market, in cash to buy a house. And I do want a house. Now, some of us may rent, and that's well and good, but me personally, I wanted a home. So I have to prep for that. And the biggest thing that's going to affect us in our future now or later on is going to be credit. So this even keeps from jobs, right? So jobs are nowadays checking credit, making sure that there's no dealings or any issues when it comes to your credit score, right? So the biggest thing that we like to talk about here, obviously the stores are out there, but check your credit annually. It's absolutely free once per year. What I like to suggest to everyone is if you're in the time frame of working on your taxes, spend that same amount of time during tax season to pull your credit reports. It's absolutely free for the once time a year from freecreditreport.com. It's an absolutely free service. It'll say it on there, offered for free. If you click on the site and it asks you for a credit card or a membership or anything like that, just know you're in the wrong place and just Google freecreditreport.com and check your credit report. Now, this is your report. This is not your score. There is a difference. I always tell people that your credit report is much like school, right? So if we're teaching in school, your report is all the activity that you do to get your score, which is your grade in school, right? So that's your score. The credit report shows you all your transactions, all your trades, all those types of things, and just make sure that it shows you, your dealings with credit, right? And your the three big, which is the Experian, Equifax, and TransUnion. So it does take some time. It's about a 30 to an hour long process, and don't close the windows. I would set some time apart and just make sure that you have time to review them. But it keeps you involved with what you're dealing with. It does show you if there's any fraud, and then it also shows you if there's any issues that you know that you did not run into that you can dispute. Right, this is the time to dispute those, and it will help your credit score, especially if you win the approval or if you win the dispute. So just a great little activity for you to focus. And it also is a great time for you to jump in when you're already dealing with money when it comes to taxes, right? But obviously, it's outside of that tax world. So uh, now we'll just talk about protecting your assets, right? Again, I know personally, and I know that this is the bane of everyone's existence, insurance, right? We don't want to talk about it. It's frustrating. We shop auto insurance, and all of a sudden we're getting calls from everyone and their mom about their auto insurance and their quotes and this, that, and the other. Make sure, though, that we spend some time looking at what's out there to protect not only you, but if you have a family, to protect your family as well, or whomever you're working with in your life that may be reliant on you. Life insurance, homeowners insurance, renters insurance, these are all requirements. Car insurance, these should be requirements in your future, right? So making sure that that's upfront there. You're reviewing your coverage. You're having conversations. I know it's a pain, but making sure that you're shopping rates because they do go up every year. They're going to go up every year. So just making sure that your budget can adjust, right? So if we can save $30 here or $40 here, that might be something to jump in and spend a little bit of that aggression that will come from it and make sure that we're on top of what's there. And finally, just looking at protecting your family or your loved ones in a whole, or anyone that again that's relying on you, having a conversation about wills, power of attorneys, trust, or even added beneficiaries to your account, right? Just making sure that conversation is there. Wills are very important. Power of attorneys, making sure that if there is a situation with a trust, that it's there. Then obviously the easiest is adding beneficiaries to your account. If you don't know what a beneficiary is, it's simply adding on an emergency. Let's think of it as an emergency just in case contact for your accounts at a bank, right? So if something were to happen to you, if someone is a beneficiary in your account, they can easily access your money and start taking care of this, that, or the other if you were to move on, right? So they do not have access to your funds other than the fact that you have moved on. So these are not individuals that can do any kind of transactions on your account, but obviously make sure that these are people that you trust absolutely, and make sure that these are people that you would leave money to carry on your your future, what that may be. So last thing, I just want to say thank you so much for having us. I know I wanted to spend a little bit of time just in case there was any questions or concerns or thoughts, anything that I could answer for you. But this last form here has a quick QR code. I know that finance is very personal. A lot of people don't want to bring up conversations when it comes to finance, and that's well and good. I understand how society works. But I also do want to kind of pull away from that mentality, right? It's okay to talk about the financial dealings that we're working with. It's okay to have conversations about the stressors that we're working with, because most of the times when we get into a situation when it comes to finance, a lot of people shut down, shut off, and it becomes a stress. So we just want to make sure that that's out there. This QR code is for a one-on-one consultation, just in case you'd like to speak to one of us here at campus. Again, we are a full functioning branch. We have all the professionals here that you would have a conversation with at any other branches that we have outside of campus. So with that, I'll just say thank you so much for being here, and I'll just pause in case there's any questions or thoughts.